The much anticipated commercial real estate crash of 2024 has yet to materialize. Are we out of the woods, or is the worst still to come? In today's video, we're going to look at the latest commercial real estate market data and give you an update on what to expect in the months ahead. Let's get into it. Welcome to Real Estate Watch, the channel that focuses on forward-looking real estate analysis for the U.S. and regional markets. If you're new to this channel, my name is Eric and I am a professional economist in addition to being a licensed real estate agent, so I can bring you a unique perspective that you'll be hard-pressed to find on other YouTube channels. Let's not waste any more time and get right into the latest data and what it suggests for the months ahead. The office market is the most problematic of commercial real estate markets, and one of the indicators I look at closely are office rents. As of the second quarter of 2024, the average asking rent was $36.13 per square foot, according to commercial real estate firm CBRE, which is an all-time high. You might be wondering why rents keep going up while the market is in distress. I've mentioned in previous videos how office property owners are incentivized to keep rents high to maintain high valuations for favorable loan terms. A sudden drop in rents would be an indication that owners are no longer interested in refinancing their loans, such as if they sold the building or just decided to walk away from the property and hand the keys over to the bank. The record high rents are definitely not an indication of strength in the market. The office vacancy rate increased to 19.1% in the second quarter, another record high. The work from home phenomenon that put the office market in its current situation is showing no signs of reversing course at this time. Data on teleworking, which is the Bureau of Labor Statistics term for working from home, shows that the number of workers who telework as a percent of all workers was 22.8% in August, near an all-time high. Another indicator I'm looking at is the delinquency rate for commercial real estate loans. As of the second quarter, this was at 1.42%, which is still a far cry from the peak of 8.8% we saw back in the second quarter of 2010 in the wake of the global financial crisis. But it is rising and has been on the rise since the third quarter of 2022. To sum it up, this is the situation we're in. The much anticipated crash has not happened yet, and I'm not seeing signs that it is imminent. Office rents are still high, suggesting owners are trying to secure financing to kick the can down the road some more. But the office market is still in trouble regardless. Vacancy rates are still rising, and the work from home phenomenon isn't reversing course in a significant way yet. We may see some headlines of companies like Amazon telling employees they need to return to the office 5 days a week, but in the aggregate, we're still seeing an increasing percentage of people working remotely at least some of the time. Higher interest rates were another blow to the office market, and while we did just get a big rate cut from the Fed to start their easing of monetary policy, it will take a lot more of that to make a meaningful difference for financing commercial real estate loans. The delinquency rate on commercial real estate loans is nowhere near a crisis level, but the trend is clear. It's heading higher each quarter. We may not be in the middle of the commercial real estate crash right now, but that doesn't mean that it won't happen. Over the next few months, however, I don't think it will be an issue for the overall economy at this time, but it is something we need to keep an eye on. A commercial real estate collapse would trigger a banking crisis and an economic recession, which would then be a big blow to the housing market. It's not an insignificant topic. It's worth paying attention to. Make sure you're subscribed and hit that notification bell down below so you won't miss my next update on the topic. We'll have the next round of quarterly data out in the next month or two, and I'll keep you up to date on the latest developments as we get more information. If you liked today's video, don't forget to give this video a thumbs up to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.